People are breaking into houses and forcing people to give them the private keys. Don't be a victim of that. I'm going to show you how in today's episode. My name is Da Vinci Jeremy. I'm in the pipe 5x5, staying alive here in Dubai. Hope you're doing well. Hope all is good. I know I'm doing fine. Boy, oh boy. Well, it was a good weekend. I took some time off. And yes, we're back in the grind here. And the cryptocurrency space is never a dull moment. Crypto will take over all of the finances in the future. You're part of this right now as it's happening. And you're learning some key skills. You're going to be learning some key skills that other people are not going to know about because you're watching this channel. And thank you for watching. Make sure you share some of the stuff that I'm about to share with you in today's episode. I'm going to talk about how to secure your private keys in such a way that even if somebody puts a gun to your head, that you're going to be able to, not have all your crypto stolen away from you. Alrighty, so with that said, right, we're also going to be talking about doing some trades for the week. I think Bitcoin and Ethereum has big trades coming up, so we're going to talk about what those trades are at the end of the news cycle. And yeah, if you have any questions, right, just leave them in the comment section below. All right, and if you're interested in trading, make sure you head over to 2bit.davincej15.com if you don't want to do some KYC. Also, OKX.davincej15.com or Bybit.davincej15.com. OKX has got these mystery boxes, so if you want some free money to trade with, you can do so by just opening up a free account on OKX.davincej15.com, and you'll be able to, get some free dollars to start trading right away. Okay. With that said, moving on to Federal Reserve of San Francisco hiring a crypto architect for CBDC project. Oh man, the San Francisco Federal Reserve is seeking a crypto architect for central bank digital currency project. An Indeed job posting has revealed. According to the role description, the employee will work on CBDC's research and development. The position is a full-time hybrid with an annual salary starting at $134,000, so $135 really, right? Minus taxes, it works out to like $60,000. It requires candidates to have knowledge of distributed systems, implementations, cryptography, protocols such as hashing, public key, private key pairs, and signing, consensus algorithms, and security. Okay. The problem these guys have, right, is that anybody who's qualified for this job understands what crypto is and why they need it. Because to avoid the Federal Reserve. So it's going to be interesting to see how that works out for them. Right? Are they going to find somebody who's like, I'm sure they're going to interview them and try to weed out the people who's like, yeah, I know you guys are printing money and destroying the value of it, right? But yeah, I'm going to work for you anyways. I'm wondering how that's going to work out. They're probably going to weed out anybody that knows that and ask those questions. But again, it's like they probably anyone who's delved into this knows that, right? Because that's the whole point of it. That's the whole point crypto came into being. All right, moving on to fake deliverymen targeting high net worth crypto investors to steal their coins. Canada police. So in Canada, it seems like the Canadian police are issuing a warning to high-value crypto investors, stating thieves are breaking into homes to forcibly steal digital assets. Police department in Richmond and Delta, both south of Vancouver, have issued statements warning of a series of break-in and entering incidents which appear to be linked to noticeable MO. modus operandi. According to a law enforcement agency, the suspects have been gaining access to crypto investors' homes by posing as delivery people or some sort of a person of authority. Once inside the home, the suspects forcibly obtain information that gives access to the homeowner's cryptocurrencies accounts, presumably their private keys or seed phrase. Okay, so to protect against that, right, what you can do is use passphrases, right, for your crypto. So if you use a hardware wallet, let's see if I have one here. Nope, I don't. So if you're using a hardware wallet, there's something called a passphrase, which is a secondary wallet that you can create, which is almost like an additional password. But it's not quite a password because you can create multiple passphrases. And then each passphrase will have their own wallet, a set of wallets. So you could have a gun to the head passphrase, right? Or you could just use the default wallet as your wallet that's like, okay, that only has like some pocket change, like 5% of your total supply of your crypto in the default wallet. So this way, if the thieves come, you say, "Here's my wallet," and if they say that's it, then yeah, that's it. That's all I got. Sorry, right? Another thing you can do, right, is obviously memorize the passphrase, right? Another option, also, which I don't recommend. Finally, this is a third option that I do not recommend. Basically, you lock the bitcoins into the future. So even if they get the passphrase, the bitcoins are useless because they have to like wait until that time. And because I'm a software developer, I can now if that ever happens, if they take the keys, I can easily just swipe them um, away faster than they can. so, so yeah, there's lots of options you can do, right? And then I think there was one more option I was thinking about, multi-sig, right? You could have a multi-sig is another way, and you have somebody else that's needed. That, for example, if somebody is trusted, you can give them their use their private key and use a multi-sig between the two, so that while even if you do have, they only have the one key, somebody else has the other, and so that's another way of protecting your assets from someone stealing them. So this is for your cold storage, right? You want to keep some cold storage of Bitcoin and Ethereum. Okay, let's go on to the charts for today. Yeah, Bitcoin did a fake out, right? It was, the Bollinger Bands were squeezing. This means that a big move is coming. That big move looked like it was going higher, and nope, it's refused and it bounced back down. Now, notice how we are still bouncing off the lower levels of this range here. This is the lower end of the range, and is Bitcoin going to break down? Most likely at this point, since we couldn't break out here or here, this means that we've created higher lows, and so that effectively can translate most of the time, not all the time, but most of the time, into the biased direction of downwards side, on the downside, unfortunately. So what is the downside for Bitcoin here? Well, if we go to the daily, we did a lot of consolidation, and you can see even the daily has like a bias to the downside. We can see that we can end up all the way back down to at least for the best case scenario at the top of this level here at the 28.5, or all the way back into these support and resistance areas that we're having trouble, and you can see the $27,000 mark in that area, and turn this into a big Bart Simpson move very fast. So that's a possibility. Now, I really believe that Bitcoin has some more potential to go a lot higher here. Bitcoin can head over to 36,000, right? From this level, we can just do an AB equals CD. But if we fail to if we just have a wick down here, then we can head up all the way to the 36,000. If we do a BART, we can end up, waiting to see what the price action will be before we can decide how far Bitcoin is going to go. So we have to wait and see, basically, before you make a trade. If you're going to make a trade to the downside, you can, but it's a little bit on the late side, because basically that we are closer to the lows, and we could end up bouncing a little bit higher. So wait for this to come back at least to the 13 AMA on the 4-hour, and then decide if there's a downward trade from there. Heading to Ethereum. Ethereum looks like the same thing. This is just like disaster situation where the EMA ribbons have completely flipped. We are downward, moving down, and we can see that Ethereum could end up breaking down further as we bounce off of support right now. If we break down, you can see that possible 1782 is the next level. Okay, I want to talk about the Bitcoin dominance, because a lot of people are asking, well, when are you buying alts? What's going on with the alts? Well, majority, I like to do the little lady strategy, where I collect a lot of alts, and I buy a massive amounts of alts across the most massive area. Unfortunately, that only works well because I want to get paid more Bitcoin, not dollars. It only works well if the Bitcoin dominance is heading down. Unfortunately, the Bitcoin dominance is heading upwards. So that means you can see the target for the Bitcoin dominance is like somewhere in the 60% range. So we have to wait until it gets up here and then decides to reverse this course, or we see it break this trend here, this upward trend. Once the upward trend is broken, then we can decide to buy alts. But I really think that's going to happen. Any kind of upward trend is going to break sometime in November or October, November, or December timeframe. Probably not the December timeframe, since that's the tax loss I've been selling, but in that timeframe. So we'll have to wait and see. Alrighty, well, that's it for today. I hope you enjoyed today's episode. I will see you guys tomorrow. Peace.